Good morning. Good morning. Of course, as soon
Hello,
as I
everyone.
hit live, my dog barks as soon as that happens. Hey, Travis.
Hey,
Good morning. Good morning. We'll let folks pile in a little bit. We are going to be recording this conversation today. And if you registered, we'll send you, well, if you're here, of course you registered, but we will be sending the recording later this afternoon. So feel welcome to ask questions throughout in the chat or the Q&A section. We definitely want to get to the meat of what is top of mind for you guys too, about variable income and some things that gig workers and variable income folks run into. But I think we've got a good conversation for today.
and I'd
And
love if we can see if the chat's working. If you want to put in the chat, either where you're from or what you do for work. We'd love to see like the variety of career paths we have in the meeting today.
yeah, let's make sure. Yeah, let's make sure the chat works for sure. So please throw something in there if you're here. And I'm Megan with Student Loan Planner and SLP Wealth, one of the senior consultants on the team. And we've got Mary with us today.
Hello.
Let's see. Ooh, write operas. That's amazing. That's really cool. I believe that's a job. Definitely. From Houston, designing pop-up books. That's cool. Raleigh, career advisor, locums veterinarian from Oregon. Awesome.
Yeah, one Megan, you'll crack up. One of my friends yesterday was I didn't realize she works at a barn as her side hustle. So she's a physical therapist and then works at a barn and like helps with
Oh,
horses and stuff. And I was like, I just love how interesting people's lives are, you know?
yeah. Yeah. I love the side hustles, the side gigs, like the fun stuff that, it maybe one day does become your full-time job. Like, I mean, literally, that is literally how I got started in financial planning. I worked at a consulting firm. I did settlement planning back in the day, which is where you advise on folks that get huge personal injury settlements. So like the $1 million things that you see lawyers like post on billboards. I was the financial advisor for the people getting that money. And it was a fun job. It's just a hard job because people in that position, they they don't totally want the help. That's the thing. And so it was kind of rough, but that's when I started my coaching practice at the time. Started doing student loan planning, coaching, financial coaching, and that became my full-time thing. So here we are.
Yeah, my story is so interesting. So obviously I have my financial planning background, student loan specialty, but my side gig is I'm a professional tap dancer. So I grew up right outside of New York City, so I started training in the city and now I teach all the time. I fly and choreograph and that's where my background started. But before that, my very first job was at Auntie Anne's Pretzels, making pretzels. And
Oh,
that's how I paid for all of my tap dance and I became obsessed with personal finances. I did the whole like Ziploc bag thing in my room for like bus money to New York City, my cell phone bill. And that's where the financial planning obsession started. So we're happy to be sharing
nice.
all of our knowledge with you guys today.
Yeah, super excited for today. And we've got Travis in the chat. So again, throw your questions in the chat. We'll get to a lot of them either throughout the conversation or we'll make some time towards the end. So let's go ahead and jump on in. I'll go ahead and share my screen and we'll just get started. Let's go. All right. So we're calling this the 9 to 5 rebellion, right? I think that was your idea, which is a great idea. Um, so let's get into the five main pain points that you yourself listening in probably have when it comes to like your gig work, your variable income. I'll let you take it away, Mary.
Yeah, and I always laugh because these are probably the things your parents told you when you maybe said you wanted to get into this line of work, or friends that have so-called stable jobs might tell you. But this is definitely what we hear. And the good news is, through all these points, we're going to offer some solutions to really get you guys on track. So the first pain point is definitely unpredictable income. I know a lot of our work potentially might be have seasonality to it, right? So maybe like summers you're super busy or vice versa. Some other months you might make no money and other months you're crushing it. So really how to prepare around that, that's super important too. Also too, for anyone that does consulting, we know a lot of times like it's dependent on how many clients you have and what do you do in those months, right? Where income is lower. So we'll chat about that. The next thing that's a pain point for sure is taxes. I don't know if any of us, as we're starting out, maybe thought taxes were taken out. This is definitely something I've heard. I have a lot of friends that are Radio City Rockettes. Hey, if I have any friends in the chat, make sure you say hello, by the way. Radio City Rockettes, a lot of people that have worked at the Met, makeup artists, things like that in New York City, LA, all of those hot areas. But sometimes people don't realize taxes weren't taken out. And that's always a really hard conversation, right? When you owe $16,000 and you don't have that money set aside. So we're going to talk about some strategies around that. There's a simpler way to do it. And then I'd say like a little more complex, but I'd argue a better way to do it. So we'll chat about that. Now, some of the benefits that you typically may lose out on. So health insurance, right? There's a lot of subsidies out there that could potentially help you, but a lot of times what I hear is people are like, I'm in a crappy position where I actually make too much money to get some of these subsidies, but then I don't make enough and it's eating into my income, right? So we're going to talk about that a little bit. There's a lot of nuances, especially when it comes to the different health insurance plans and ways you can save and plan for expenses going forward. With retirement savings, I know a lot of times we might just be so focused on the day to day that we forget we need to pay ourselves first, right? And think about our future self down the line. What are we doing to plan for that? Because Social Security, will it be there? Will it not? No one truly knows. There's definitely going to have to be some changes, which I'm sure some of you have heard, right? Because the system itself is due to potentially run out of money in a few decades. So will they push the retirement age back? And some people just don't want to rely on the government, right, for retirement. So we'll talk about ways to plan for that and to also save on taxes today. It's kind of like a win-win situation there. I also laugh too, because whenever you search, like, what is the best retirement plan for me? There's so much information out there, but it's very specific to each person. So we'll chat about what we see as being the best, option for you with regards to certain income levels and things like that. And then lastly, this last category here, not really the, paid time off. That's fun. That usually is vacations, right? How to plan for that. Because if you have, the typical 9 to 5 job, a lot of times that's baked into your annual salary. Whereas if you work for yourself, if you take time off, you're not working typically and you're not getting paid. So we're going to talk about some strategies to solve for that. And then the not so fun stuff and sometimes awkward and things people usually want to put off is like thinking, will I ever become disabled? Will I die prematurely? We're going to get into the nitty gritty here, guys. And then, the retirement savings match. Anyone that works for corporate America, a lot of times they're getting, let's call it free money into their retirement plan. And that's potentially a benefit you're missing out on. And I would say too, like, there's a lot of positives to creating your own business and working for yourself. It's just a matter of you have to do a little more research on your own. So it's great that you all signed up to be a part of this webinar today, because we're going to give you all of our tips.
Yep. And a lot of you too might be like in a hybrid position here where like you do have a W-2 job that provides some of these benefits, but you're doing your gig work or your side work in addition. And then, maybe the hope is eventually you transition completely to that independent contractor side of things or like working for yourself. So it's good to know how these things work that you could take advantage of now with your employer, but also like how you can kind of wean yourself off over time to where like that's not what's stopping you from taking the leap and going into business ownership or going solo. Because it doesn't have to be. And we'll talk a lot about how you can kind of build your own benefits package. And there's a lot of benefits to being able to do that because it can be completely customized to you, which is pretty cool. Where with an employer, we're offered what we're offered, right? So there's some options, but we don't have as much that we could really customize a lot of times. Let's talk about the unpredictable income part of gig work and variable like positions or working for yourself. Like that is probably, I don't know, a lot of people would argue like the hardest part, like not being able to really predict what their income's going to be. So it makes it hard to budget, makes it hard to know how much you could save. So let's jump into that.
So especially in the first few years that you're starting out, try to, at least track or gauge how much you think you're going to be earning. So that's a great starting point. And then I would say just be forward looking with that. So when you're going into the upcoming year, if are at a certain amount of clients and maybe your client load increased, you can probably predict I'm going to make a little bit more than last year. The reason this is important is the biggest thing you can do for yourself is to automate things, right? So whether it's automating your savings, automating your debt pay down, automating retirement, all of these things, it's super important to at least have a gauge, right? And that kind of ties into point number two. Income can fluctuate month to month. So I always like to say, like, what is my lowest earning month? And when I was first starting out in my whole tap dancing business, when I was actually in college when I really started it, I used to track it in Excel. And I started to learn that in the spring was actually my lowest earning months, right? So May, June,
Hmm.
July. And when I was younger, I used to just rack up credit card debt during that time. And then in the fall, in my busy season, I would pay it off, which, was okay, but there's better ways you can do it. So what I tried to do was save for that and plan for those months. So I had the money set aside. So in those, I wasn't, dipping into the credit card and racking up debt. So that relates to point number three. With this monthly reserve, those months where you're rocking and rolling and making more money, you can siphon off some of that into what we call that monthly reserve account. So the money is set aside, ready to go for you. Now, we sometimes get questions, especially with people that, maybe are working, let's call it a normal job, and then they have this little side hustle or side gig, right? They're like, when can I comfortably like break away? And I actually had my sister's best friend is a makeup artist for a lot of Broadway people, TV. And before that, she was doing the typical restaurant job, right? That's what a lot of performers end up doing and people in the arts. And she, would always ask me, like, when can I make the switch? So the typical advice is you want to have potentially 2 years of just like your basic living expenses saved away. I would say that's really a goal number. Like, do you necessarily need that much? Maybe not, but a lot of people, when you do make that switch and the income is slow, we get nervous, right? And we're like, is this going to work? So to have that money set aside is great. Then once you're pretty steady with the income, we get questions a lot like, how much should my emergency fund be? Because if you go on Google and you search this, it says anywhere from 3 months to a full year. So what I would say is the comfortable spot that we've seen for people in these lines of work is about 6 months, just because your job potentially may not be quite as steady than a typical 9 to 5 worker. And one thing I always want to point out is if you do have another job on the side, or you have your spouse, has a job as well. Typically, you don't need as much because if one of you were to lose your jobs, the other person's still working, so you wouldn't need quite as large of an emergency fund. The next thing I always chat about is, where should this money be? Definitely not under your pillow, not in a Ziploc bag like I used to do. There are better solutions to that nowadays. So while we love like the Wells Fargo, the Chases of the world for checking accounts, like their savings accounts are worthless. I don't know if any of you potentially have one, right? It's like 0.01% or something crazy, like pennies. So the high yield savings accounts at these online banks are super powerful. They're pretty much neck and neck with each other, but you can expect to get probably like 4.3% to 5% on any of these accounts. They're all FDIC insured. That basically means your money is safe. You don't have to worry about it disappearing. And you always can link it to your checking account. So it makes it easy to move the money around, but your money's just working harder for you. Also, too, you can nickname the account. So you can actually call it emergency fund. You can call an account monthly reserve. And just from like a psychological standpoint, it just helps to see the money kind of spread out. My favorite account, Megan, is vacations.
Yeah. Oh, yeah. The little buckets you can create, bucket for vacation, bucket for house down payment, like whatever you want to do there. Yeah, definitely don't put this money under your mattress, or this is a legitimate true story of a client
Oh,
of
I love
mine.
this story. I love this story.
Someone's father buried their savings, like literally in the ground, took their dollar bills and buried the in the ground. And it was, probably to not be tempted to go and use it or spend it. It was a safe place that they thought at the time, and that it sat there for literally 15 years. Somebody buried their cash in their backyard. It sat there for 15 years. They went to go dig it up, literally dig it up, and what was unfortunate was it was water damaged. They probably didn't put it into something that was going to be, standing the test of time 15 years underground, right? So they had to dig it all up, pull it all out. It was unusable cash. And so they had to take it, they had to basically ship it off, take it. I think actually they went in person to DC. They had to take it to the Treasury office and get it traded in. It took 2 years to get recouped that money, like for them to verify every bill was like legitimate. It was damaged, so they had to reissue new dollar bills, but 2 years. So that is a really long waiting period for burying your cash. I don't recommend that. High yield savings accounts are way better. Worst case scenario, it takes a day to transfer the money from savings to checking. So that's much better than 2 years.
Yeah, and that person was like losing money, right? Because it's sitting
Yeah.
underground literally, and they're not earning anything on it. And with inflation, which I know we've all heard about, and inflation's crazy at the moment, you're losing value to your money every year.
Yep. Well, let's show an example of how because we actually talked about this on a podcast episode that's going to come out soon about how to try to budget for kind of unpredictable income, how we can use certain tools to help us kind of break the barrier of the traditional, what is the word I'm looking for? Like the traditional budget that everybody hates, right? Like thinking that you have to um budget for every single category. But let's pull up an example of how we do our planning and our budgeting. But I lost my web page, so give me a second. Oh my gosh. I swear I'm not tech illiterate. I'm just not great at it. Okay, here we go.
It's early in the morning to give you a pass.
Yeah, and thanks guys for joining us this morning. Our future webinar schedule, we are planning on making later on in the afternoon. So this is actually, I think, the last one of our cycle that's going to be earlier in the morning. So come hang out with us for lunch over the next month or so for other topics that we're going to have. So let's say, you're coming to us, you're wanting to put together a budget or in general, like you're wanting to put together a budget for yourself. It starts with just getting organized at the end of the day. Like there's no way around it. You have to get organized. You have to understand what you're working with, what money's coming in and what money is going out to start putting together a budget or a spending parameter for yourself. So this is an example of just a Google Sheet or an Excel document. I have a lot of different categories here listed just to kind of get the mind going, right? Everybody has different expenses. Everybody spends a little bit differently. So there's a lot of things on here that might not be applicable to you, but could be applicable to somebody else. And Mary, your advice was really good, taking a look at what your lowest month is going, what has it been historically, or what do you expect your lowest income month to look like? And what's a really great month? And then let's try to find a healthy average between the two to give yourself kind of a salary, right? Because you're going to make a lot more in some months, but you're going to make less in other months. So we have to kind of teeter this line where we are taking advantage of the really higher months, socking money aside, like you said, to kind of surplus or to prepare for expenses that maybe we wouldn't normally be able to pay for in a really low month. So in this example, we just took like $100,000. Let's say we're making about $100,000 a year on average per month. That might shake out to about a little more than 8,000 gross. And then let's say we live in maybe a high cost of living area. We're living, maybe on our own. 2,500 a month is going to rent. I threw in just some numbers to talk about. So student loan payment, maybe we don't have a giant student loan balance. We've got a pretty nominal monthly payment. We're working that balance down. Maybe we did purchase our own life insurance. In this example, I'd probably be saying as the planner, hey, we should probably look at disability insurance too. Renters insurance, like a lot of folks will have that, or homeowners insurance if we're a homeowner. And then let's say we are trying to save and put money into an IRA or a Roth IRA because we don't want to forget about retirement, right? And then the variable expenses. So this section, so the fixed expenses are going to be a lot easier. Those are easier expenses for you to rattle off because they're the same every single month. Like you pay the same for your insurance, you pay the same for your rent. Some utilities can be somewhat fixed or average. But the variable expenses are where it's a little tricky. And this is where you do just have to do a little bit of research on yourself. Look at the past couple months, look at the past year's bank statements. A lot of times, credit card companies will give you this cool little pie chart that breaks out like what categories you tend to spend money in. So you could lean on that. But get a feel for how much you spend in different areas. So everybody has to eat. Everybody probably goes to the grocery store. So we're probably going to have some expenses here. And this is, I will say too, usually of the top three expenses that every household I feel like has, groceries, eating out, that is like one of those top three expenses, right? It's usually housing is number one. Next in line is probably eating, and then maybe childcare if we have little ones. So don't feel
Yep,
bad.
child's care is another mortgage. For anyone that has
Right.
kids on this call is like, yep.
Yep. So don't feel bad if you feel like you have a lot of expenses when it comes to food. You are legitimately feeding your body. So that is a necessary expense. It is a controllable expense though. We have some, wiggle room in how much we're spending at the grocery store, how much we're eating out. Um, and then so just do a little recon on the past, like, however long you want to go back, do a good average, and that gives you an idea of how much on a regular month you might spend. Then this next worksheet, this is an example of how we analyze somebody's cash flow or their budget, and then we start to make suggestions on how to kind of simplify things even further because right, this is pretty tedious over here, listing out these different expenses. We can make it easier though, so don't worry, I'm not going to tell you to do this every month. It's more so like let's get a baseline so we could figure out what our next steps are going to be. So this next page for us, it might be a little overwhelming just taking a look at it. Let me make it a little bigger. So we've got our income coming in. This is Beyonce Poppins. We're not creative. We just came up with some names and mushed them together. Um, expenses. So here, this is where I'm taking a look at, how much of our gross income is going towards these necessary expenses or these month to month variable and fixed expenses. I really love to keep this range between 45 and 50%. A lot of times if we're, single, living on our own, this might be higher because we're not really splitting these expenses with anyone. So I have a little grace in this percentage, but generally from a financial planning perspective, we want to be spending within like 45 to 50% here. As you can see in this example, like rent is the highest expense. So there's only a couple ways you could fix that. One, find a cheaper place to live, or share with somebody, get a roommate or share with a partner. Otherwise, that's where we're at, and that could be okay. And then dropping down taxes. So we're going to talk about taxes here in a little bit, but I put in an estimate for how much we should be swiping aside for taxes because our income is not doing that for us. Our 1099s are not doing that for us. Insurance, we're paying for that out of pocket, and then savings. And so that gives us kind of an idea of what surplus we have to work with at the very end of the month. Like how much is extra that wasn't committed to anything. And then what we could do to simplify things a little bit further is instead of making you track all of these little expenses or these different categories, really, we just boil down what are those variable expenses that do change month to month. So like groceries, maybe entertainment, gifts, things like that. Things that like it's not a fixed number every month. We might pay something different this week than we will next week. But let's boil that down to a spending budget. Maybe that's what I'll call this, spending budget. And then we try to stick within this range to make sure that we're staying within our healthy spending parameter because the fixed expenses are what they are. We can control those variable expenses. And so if like the idea of budgeting and tracking each one of those categories is really exhausting, which understandably so, we could really boil it down to just let's give ourselves a spending budget and then who cares what that money is spent on, right? This can kind of give you some freedom on what you spend your money on because there might be one month where you have your friends in town and you're eating out a lot more than the next month where maybe the next month you're spending more on gifts because you're going back home or something. um, but I know you like this method as well, Mary. Anything you want to add to kind of how we think about this?
Yeah, I mean, I love sticking to that number. I think it's great. Whenever I've had friends that really like track their spending every single month and spend like a lot of time, I'm like, listen, just know what the max is that you can put on your credit card every month, and then you can spend as you wish. It's really the best way to do it. And also super important, which we'll get into, is like when you own your own business, like you need to keep everything separate, right? Personal versus business expenditure.
Hmm.
So that's very important. Something
Yep.
if you work with an accountant, they're going to want to see that.
Yeah, we'll talk about that here coming up. So yeah, this is just an idea of how we could start to like take a look at your inflows and outflows like strategically, like not be reactive, but be more proactive with how we're treating our money and our spending and putting money towards things intentionally. So let's flip back over. So we talked about a little bit about unpredictable income, how we can maybe make that less variable or unpredictable in a sense by giving yourself kind of a salary, giving yourself a spending budget that's the same each month, having that monthly reserve to protect us from those like lower income months that might affect like how much we could spend. Let's talk about taxes though, because I did have a number plugged into that worksheet for taxes, but let's talk about how we should treat taxes and plan for taxes. I'll give that one to you.
Cool. So I always like to start off with some positives. A little win for us gig and creative workers and 1099s, right? Is we get a lot more write-offs than the typical 9 to 5 worker. And this truly is a win. If you are working with a CPA, they usually can provide a lot of guidance as to what will be okay from an IRS standpoint versus what is risky. You may have heard people
Hmm.
say, "Oh, when you own your own business, you can write off every single thing," which I would probably argue that is wrong and very risky. So what my CPA does as an example is they say like, okay, yeah, you're good. This is the green light. And then if we start talking about some other things, I'll be like, this is a little bit of a yellow light. And then he'll say this is a red light, right? So super important. You also want to make sure you're tracking this. I always joke that the most simple way to do it is just to like on your phone, just put a memo and just notate every single expense that you have. The better way to do this is Excel for sure, a little bit easier once you get the hang of it. QuickBooks is a little more tricky to use, but a little more advanced. So if you've been established for a while and you have a lot of varying expenses in different categories, that's probably going to be where you'll want to end up eventually. Another thing that sometimes a lot of people overlook is mileage, right? Tracking, especially if you have a car, even if you're in a city or in the Midwest, right? Just driving everywhere, you can deduct a lot of that mileage, and that helps you. So make sure you don't have to track every single day, but maybe 3 days a week you're driving to point A, and that's 50 miles one way. Just make sure like to calculate how many times throughout the year were you driving there, because that's going to help you from a tax standpoint too. Now, point
Hmm.
number two, with we must pay the IRS. I don't know of anyone that loves the IRS here, but it's a fact of life. Death and taxes, as they say, right? The only two certain things that happen to us. So I'd say this is an okay option, is to, kind of guesstimate, like forward looking, what your income's going to be for the year and to save a certain percentage of that. Okay. So I'd say this typically varies anywhere between 25 and 30% is a good starting point of what you save. The reason that, your accountant can help you zero in on the exact amount, but it's very dependent on where you live. It's very dependent on your income level and then how many write-offs you have. So if you want to be a little more like over conservative, I'd say 30% is a good way to go. And you would want to, have an actual taxes savings account in your online bank. And then what you could do is monthly automations going into there. So the money is set aside for when you want to pay your taxes. If you do that approach, you're typically going to get penalized a little bit. From what I've seen just with my background, it could be around a couple $100, so nothing too crazy. But the better option, where you're not going to be penalized for the most part, is to pay quarterly estimated taxes. So this is something, we're in the midst of tax season right now. If this is something you want to do for the upcoming tax year, definitely let your accountant know, and they can set you up with exactly how much you're going to be either paying online, or you can mail to usually your state if you have state income tax, as well as the federal government. So then hopefully when you file your taxes the following year, you don't owe anything additional. That's always the best situation. This is I'd say the best way. This is how the IRS wants you to pay them.
Hmm. Yeah.
Now, point number three, this is an interesting point because I know a lot of us potentially may get paid cash is almost, they always say cash is king, but I'd argue a lot of people just don't even pay with cash anymore. I don't know if I have any
Hmm.
Sweet Green fans. Have you ever had Sweet Green, Megan?
No, but I watched YouTube videos about it in New York, right? It's that like salad healthy place. It looks really cool. I've never tried it though. I would love to.
Yeah, I'm obsessed. It's like the only healthy thing I eat. But regardless, they don't even take cash anymore, which some people, it was this
Mm,
big controversy because some people are like, some can't access cards, blah, blah, blah. But I get it. The reason I'm bringing this up is, cash is kind of gone, but Venmo and Zelle, I know for me with like I can do a lot of private lessons and a lot of people will pay me through either Venmo or Zelle. And, a common misconception we see is that if you make under $600, like you don't need to report that. Because if you make 600 or more, a 1099 gets generated. But if you really read the fine print, the IRS says like any income source, any amount needs to be reported. And I would also like to bring up for anyone that's looking at potentially getting any type of loan. So whether it's maybe buying a home or just trying to prove income for getting an apartment, getting a car, a business loan, you really do want to report this money because they base it off of sometimes like a percentage of what you make. So if you're, let's say, 30 grand, you're not reporting, that's going to really limit you on what you can afford. So sometimes it's a little bit of like a bitter pill to swallow to, start,
hmm.
notating this. But Venmo had been cracking down on this a little bit, and there's ways to track. I always laugh. I had friends that'll just like do a little beer icon when like they're paying someone to make it look like beer, but I'm like, oh, I don't know. You might
Yeah.
get caught. Not worth
Well,
it.
and it does like legally, right? You're supposed to report all your income. But also, like if you're not reporting your income, just like you said, it does limit you in other areas. Like there's cons to not reporting the income, right? So like mortgage verification, rent verification for income, like they're not seeing that as gross income on your taxes or that you're reporting, then they're not factoring that into the percentage that's going into that decision. But also like retirement savings comes into play here too. Like if you are looking at opening like a solo 401k, for example, or like an account that it dictates how much you can contribute based on your profitability or your revenue, that's going to limit how much you can contribute to retirement. And that's a way that you can reduce your tax burden, right? So instead of like not reporting it, maybe just throw it into like a pre-tax account or something that then we're technically not paying taxes on it. So we'll talk more about
Hmm.
that next, but um yeah, that's a good tip though, a good point. And then I know we also wanted to chat about solo or S corps in general, right? So if you're earning over 50,000, it might be something to consider looking into an S corp or an S corp filing because you could be an LLC, but elect to file as an S corp. And I think you said too, I'm getting blown up on my Instagram or like reels about this too, right? I think
Hmm.
everybody's talking about S corp filings. Is that right for you too?
Yeah, I was laughing because, like, obviously in our line of work, just I follow the strangest people and things, but the amount of marketing I've been getting for S Corps is literally
Hmm.
insane. So, if
Yeah.
any of you have heard this term, I don't know if some of you already have one, but I'd say we just wanted to include this little graphic because you typically don't want to or wouldn't really consider doing the S Corp election unless you're making over 50 grand. And the reasoning behind that is they're a little bit more expensive to like
Hmm.
operate, right? Because if you're working with an accountant, there's a lot more paperwork, filings, etc. So they're going to charge you more. And then you also need to set up payroll for yourself because what an S corp basically does here, let me just move my little chat box thing.
Hmm.
Um, Instead of just all of this passing through as like your income, if you look on the right hand side, the way the S corp does this is it kind of splits it into two, your income. So basically, you have to charge yourself a reasonable salary plus a distribution. Okay. Now the sal I always crack up reasonable, right? Because the thing is, this distribution in theory gets less of a tax hit. You're not paying self-employment taxes on this. So, people sometimes are like, all right, let me pay myself a $10,000 salary for being, maybe a health coach or whatever it may be, which you're clearly going to make more than that, right? Reasonable salary. And they're like, I want to try to get as much money as possible in this distribution bucket to pay the lower tax on it. So this is something the IRS really checks and monitors. So you want to make sure it's a reasonable salary, but the main benefit is the self-employment tax. So as you see, instead of 15 grand, you're paying about 6 grand. The personal income tax amount is still the same. 30 grand. One thing I want to point out with this self-employment tax, if you're working for like a typical employer, they're paying half of this. So that's one potential drawback of working for yourself is you're kind of paying double in this area. Okay. So the
Mhm.
net income, as you can see, is much higher. Typically with, this 100 grand, it's, $9,000. And Megan and I were talking about, then the fees come out of that, right? So you're paying your accountant, you're paying a payroll. So at this $100,000 income level, you're probably still netting about $7,000 per year profit,
Mhm.
by doing this S-Corp election.
Yep. Yeah, and the fees associated with S-Corp, again, like you are likely going to need to set up some kind of payroll service, which sounds kind of funny, right? Because you're like the only person probably working for yourself. But to pay yourself a W-2 wage, you have to have some kind of payroll set up to where it generates that W-2 for you at the end of the year. It writes you a paycheck. So you can do that once a year. Like you can pay yourself once a year. You could do monthly. That's where you could start to design what makes the most sense for you. But that payroll service is going to come at a cost, right? The company is going to charge you to process your payroll. And then a CPA, like this is a separate filing. You'll have a separate filing to add to your personal return. It's more work for the CPA. So they're going to be charging a little bit more for that cost. But it could be worth it, right? If we're looking at like 100,000 in this example, like this net makes sense. Like even if the CPA was charging, 1,000 or 1,200 minus payroll tax as well, maybe like another $600,000, like this net difference still makes sense. So it really just comes down to like, what are the numbers? Because it also depends on what you pay yourself, right? What your reasonable salary is. Because if you file as an S corp, but you are paying yourself 90,000 in wages, like the 10,000 in distribution might not make up for like the cost of having that S corp filing. So it's kind of tricky. That's why like there's not a one size fits all. It's not completely everybody should do this or the other if you're making over a certain amount. It still depends. So you do want to entertain this carefully with maybe a CPA or a financial planner in the future. But very interesting topic that probably everyone on here is getting like pelted with on their Instagram feeds. Cool. Okay, let's talk about health insurance. And I did see this in the chat a little bit
Mhm.
too. Health insurance can become really expensive when it's not subsidized. So let's jump into that.
So one thing I want to point out first is anyone listening to this that's under age 30, there's something called catastrophic insurance, which is really powerful if you're pretty healthy. It just covers you. People always say, what if something really bad happens? That's what covers that. So you just have to know your annual healthcare spends, which I always laugh because the 1 year, Megan, I didn't have health insurance. I stepped on a piece of glass, my foot got infected. I scratched my cornea. The eye drops were $500. I can't put eye
Jeez.
drops into my eye, and they would drop on my face, and I'd be like, "That's $30 down the drain." And I was like crying. I like can't even make this up. The 1 year I didn't
Oh,
have it. So from that point on, I always made sure I had health insurance.
right.
um,
Yeah, it can be
so
risky because those things add up really fast, and it does feel like sometimes it's like a prank. The life is playing a prank on you. Like when you don't need it for the year, it's like wasted money. But when you did need it, like maybe you didn't have it or didn't have it good. But yeah, definitely have health insurance. It at least catastrophic or I think that's like the probably the cheapest plans you could find.
mhm,
They have a huge deductible though. Um but they'll pay for if something really bad goes on. Like if you're in the hospital because of a car accident or the catastrophic is bare minimum, but try to, like you said, kind of evaluate what you usually spend and what you might anticipate spending in this upcoming year and go
mhm.
from there.
Yeah, and always keep track of what you spend because as an example, if you're someone that has to take a lot of medications and there's certain providers that, if you were to make a switch to your insurance, you maybe couldn't go to that doctor anymore. I know so many people when they find a doctor they like, they're like, I need to keep going to this person. You always want to make sure if you are switching, maybe going from like a bronze to a silver plan, vice versa, you want to make sure that those people are still covered. One thing that's super powerful is this high deductible health plan, and it's called health savings account combo. So if you have been tracking your expenses and nothing crazy has been happening, you're blessed. You may even consider moving to this bucket. It really just helps to keep more money in your pocket. So basically, your monthly cost would go down, and then you could redirect some of those savings into this HSA account, which we call it the triple tax benefit account, because in theory, what you put into the HSA gets deducted on your taxes. So you're saving on taxes today. You can actually invest the money in that account once you reach a certain amount, and that money grows tax free. And then when you pull the money out in retirement for healthcare expenses, you don't pay any tax on it. So it's almost like a Roth IRA, but a little bit better for health expenditures. And what's nice too is you could, in theory, just use this money, that year. They usually give you a debit card, and it's very easy to keep track of your healthcare
Mm-hmm.
expenditures on that.
Mm-hmm. Yep. It's a really cool tool. And yeah, with a high deductible plan, you're paying less in your insurance premiums. You will have a high deductible. So that means if you do have to use services or go to the doctor, it might be more out of pocket at the time, but that's where this HSA savings comes in. So it's a really good combo for those that don't go very often. Um, awesome. Okay. Oh, and then last note I was thinking about too, health insurance can be deductible depending on your structure. So you could deduct the healthcare expense. There's also deductions in general, like if you spend a certain amount above like I think it's 7.5% of your adjusted gross income, you could write off, or if you're itemizing, you can write off those expenses. So that gets into the weeds of taxes with health insurance, but there are ways to, have it also reduce what you're paying in taxes in general. Retirement savings. So retirement is going to be the biggest bill of your life, right? It's like saving for the time where you're not going to be having to earn active income. So there's more of a challenge with folks who are solo because there's just not something readily available, right? Kind of an interesting fact I'll mention, and then I'll let you get into it. 401k plans, like with an employer, right? They historically there's some rules about like how how many people have to be participating, and there were a lot of studies that were showing that a lot of people, even though a 401k was available, were not participating in the 401k plan. And I think one, it was because it's just more work to just opt into it. And then you can kind of get like decision analysis paralysis, I think is what it's called. If you don't know, like, oh, what fund should I be in? Like, what should I be investing in? How much should I do? Then you get kind of nervous about making an election. But what they realized is if they set it up as basically you kind of get auto enrolled where you, instead of having to intentionally opt in, you had to intentionally opt out. The percentage of people that started participating went way up because people didn't have to take action. There was some kind of provision, where you could have it invested into like a target date fund based on like your age. So they made it a lot easier for employers to kind of meet those thresholds of like having people participate by offering that kind of change in the 401k plan. And now what does that even mean? Like, so let's boil that down. Why does that even matter? Automation is really helpful. Like automation takes decisions out of the equation for you, takes time out of the equation for you. So without a retirement account through an employer, we don't have that luxury, right? We don't have the luxury of automation from the get-go, like from the beginning stages, but we can create the automation. We just have to take that one step to like get access to these plans. So what I want to kind of boil it down to here is I don't want you to not start saving for retirement because it seems a little overwhelming right now. Because if it feels overwhelming right now, it's not going to feel better in 6 months or 12 months or 5 years down the road if you're not like taking the time to take a look at it. So let's talk about how we could jump into it and not forget about retirement because I do see that a lot happen.
Yeah. So the first point here, this is a healthy savings rate, aim to put away 10 to 20%. And I'd say you'd probably be at the lower range if you're working to potentially pay off credit card debt, you have large student loan balances, or you don't have your emergency fund set. That's where you may want to start with a lower percentage. But if you have that general framework set, aim to do 20%. Now, with the next 2 points, sometimes, if you Google retirement plans for self-employed people, there's so many potential options. So we like to simplify it a little bit. And we just did 2 tiers, right? So anyone making less than 100K and anyone making more than 100K of income. If you're less than 100K, what we typically see is to save 7,000 per year is probably the most you could do when you're factoring in all of your expenses and things like that. So setting up either a traditional or a Roth IRA is really the best way to go. Since we are very student loan heavy here at Student Loan Planner, obviously with our name, SLP Wealth too. If you have student loans, doing the traditional IRA helps to lower your AGI, which in turn helps to lower your student loan payment. So it used to be 6,500 every 2 years. Typically, they increase it by about 500. And if you're over a certain age, you can save more. It's called a catch-up contribution. Um, Now, point number 3 here, if you make more than 100K, a lot of times you'll probably be able to save more than 7,000 per year. So this is when we can talk about doing a SEP IRA or a solo 401K. There's a lot of nuances to these plans, so I
Mm-hmm.
don't want to bore you, but I think the simplest way to think about it with the SEP IRA, even though this is the max, um, it's about 20% of your income, give or take, that can go into a SEP IRA. This is something your accountant will run for you. The solo 401k is a little more popular, honestly, because you can put more money away. It's like 2 different calculations that go in there. So I would say first start off like with what income you make and then go from there.
Mm-hmm. Yep. They've made solo 401ks a lot easier to open lately too. So they're becoming more popular. There's less math that goes into figuring out how much you can contribute. So
Mhm.
they could be a good option to consider. Now let's talk about the loss of the additional benefits and maybe some things that we could do to protect those benefits in a way or create them ourselves. So paid time off, that's one.
Yeah, for sure. So the typical 9 to 5 worker gets vacation time baked in, and we as entrepreneurs do not. So this is where, having that savings account at the online bank, calling it vacations, even time off, and just automating some money per month into that account is super powerful for yourself. So you don't feel guilty when you're trying to take a trip and
Hmm.
you don't run into like a negative cash flow situation too. This next point here with the commuter benefits, a lot of my friends that work in New York City, as an example, for some of these bigger companies, get like $250 a month towards their transit pass, their rail pass, things like that. These are benefits we don't get, but a caveat to that is we're able to track our mileage and travel expenses, and we can write that off on our taxes, which is very powerful. Now, life and disability insurance. A lot of times people get this through work, but what's very interesting is a lot of people don't realize when they get it through work and they leave that job, it just goes away usually. There's some little
Hmm.
nuances to how you could keep it, but a lot of people would benefit from just really getting their own life and own disability insurance. We never want to think about dying prematurely or hurting ourselves, but unfortunately, like becoming disabled, you have a high chance at some point in your working career. I think the number one thing is back injuries, from what
Yeah.
I've heard.
Back injuries. And it could be like, I think disability insurance too, that's like a really aggressive word, but I think the way to think about it is disability insurance is really paycheck insurance. So think about it like you as a gig worker or like 100% solo, like you are your own ATM machine. Like you have to work to make that money, right? But if you can't work because you're very sick or you are very injured, like maybe you've broken your leg and you're not able to tap dance, right, Mary? Right.
Don't
So
even
like
say that. That would be
I'm
terrible.
knocking on every wood that I have in here. But really, like no one wants to think about that stuff, but when it happens, it is catastrophic to your finances. And if you don't have a supportive, if you don't have family that can help or friends that can help, or you don't want to burden your family and friends with that, with like having to pay for your expenses while you're out, like that can be a really sticky situation to be in when you're already down. Like talking about getting kicked while you're down. So disability insurance, I think, is a really important thing. I feel like sometimes I can argue if we had to prioritize, it could be more important than life insurance if we don't have like dependents or debts that would carry over to like a loved one, for example. So, because disability insurance affects your finances and can protect your paycheck or your income while you're still here, which is again kind of morbid. These aren't fun topics, but they're like, it's kind of like last example I'll make and then we can move on. Like you have to pay auto insurance if you drive a car, right? You have to by law. every year that you don't get into an accident, you're not like, you're not like, dang, I wish I did get into an accident so I could have used my insurance. Like, you're just not going to think about it that way. Insurance, hopefully, is a waste of money, right? That is a weird way to think about it, but that's the truth. Like, hopefully, it's a waste of money. Hopefully, you never have to use your disability insurance, but the time that you need it, um, that's going to be like when you're like, oh gosh, like thank goodness I have this in place. Or if you don't have it, that's when you're going to panic a little bit, right?
Yeah.
So,
And to Travis's point in the chat, like it's very expensive. So as a worst case scenario, having that emergency fund, and especially if you have more of like a year's worth, that is very powerful just to have that if the disability
hmm
insurance proves to be too high. And I think something a lot of people forget about is when you're building your own business, like down the line, like you're building hopefully equity, right? That you could maybe sell this business to someone. So some people, I'd say retirement isn't just all of like what's in that retirement plan per se. It could be in the value of your business, especially if your
hmm
business can run without you. That's always like, it's going to be higher from a sales standpoint if someone else can run it versus like the entire business is you. And if you're not here, the whole business falters. So that's definitely something to think about too as you're growing and expanding throughout the years.
And there's still value in like your book of business, like your
Mm-hmm.
contacts or your clients. So, we talked about a lot. Let's talk about how to prioritize for 2024. Like, what are some things that we could definitely get down into to make a positive impact in your finances this year? So first would just be get organized. I think I said that at the very beginning. Let's get organized, figure out if we need to maybe set up a specific business structure. We didn't talk a ton about that today, but we could be a sole proprietor. That's just, you're not an entity. You could set up an LLC, you could set up an S corp, or you can have an LLC and file as an S corp. Really, the way to think about the business structure would be start with maybe liability. Do you have liability in what you're doing? Could you see someone suing you for your business? So, for example, I have a client who makes those baby. You said the word yesterday, and I forgot it again.
Mobiles.
Mobiles, yeah, that hang over like a baby's crib. She makes these custom mobiles, which I think is so cool. Um, and she sells them on her Etsy shop and she is an attorney. She set up a LLC and her reasoning was because, she said, heaven forbid, like something falls from my mobile or the mobile falls and the baby is injured or, in worst case, like killed. Like, I don't want to be liable for that. And, or I want to be protected is more so what the key was. Because if you have an LLC set up and you're sued for liability, it's within the LLC, so they can only come after assets that are within the LLC. They can't come for your personal assets. So that might be something to think about is like, is there a chance for you getting sued? Which is also not a fun thought, but think about that. And then, if so, an LLC might be just like one layer of protection that you could set up. But anything you want to add to that?
No, I think that's spot on. And then Travis said, get an umbrella insurance policy too.
hmm Yeah,
I love the
be
names for
smart.
these things. Umbrella.
Right. And umbrella insurance is really inexpensive. You could tack it on to your renter's insurance or your homeowner's insurance, and it's really inexpensive. So figure out the business structure, separate your personal and business spending, keep things separate. That is absolutely what we want to do. Keep things separate. It makes your life easier come tax time when you have to tell the CPA or plug into your tax uh, uh, software, what expenses you had instead of having to go through all of your bank statements from like and deciphering between a personal and a business expense. So keep it separate. It could just simply be a separate credit card, could be a separate bank account. If you have a business structure, you can set up a business bank account with the EIN number. Track those expenses and start saving for taxes. Like, this is how you can get organized, keep things clean, simple, and feel good about like where everything's going, right? So that's number one. Number two would be to pay off. So let's prioritize other things in our finances, right? If we're thinking about, okay, well, I have some money coming in, I've got this all organized. What should I focus on next? Well, let's focus on paying off any higher interest debt. So if you have credit card debt, that is the most expensive debt to carry, 20 to 30% or more interest rates on like what you already spent. So it's a really expensive bill to add on to your like regular monthly spending. So don't carry credit card balances. Get a plan for long-term debt. So if you have student loans, large student loans, small student loans, whatever shape or size, get a game plan for what you want to do with those and make sure that you're being as efficient as you can with your pay down plan. Third, establish that emergency savings, right? So credit card debt sometimes happens when we didn't have the emergency funds set aside. Something came up unexpectedly, or we were out of work for a little bit. So establish that emergency savings so we don't have to run to credit cards in the future and pay those high interest rates for the debt. And lastly, set up your benefits package. So that's a little more nuanced, right? Depends on what you need, what kind of products you're looking at, but there's also a lot of freedom in this. You can create this, make it, as customized to you as possible, which I think is pretty cool. So set up your benefits package and start saving for your future, start saving for retirement, those future financial goals that you have. But those are some really, I think, doable and actionable steps that you guys could take to get organized for 2024. So, okay, let's talk about financial planning. Of course, we're financial advisors, we're financial people. So why is financial planning important? Personally on your own or working with a professional? Um, Really like knowing different planning opportunities that can get you to financial independence faster, like that's really key. Like you don't want to be working harder than you have to. So if there's like some tips and tricks, like this is a great first step, like coming to this, listening in on this conversation, learning, taking a nugget of information and applying it to your situation. That's great because you're probably going to save yourself money, time, or energy somewhere, right? So, it helps you find opportunities to get to your goals faster. um, you know, Folks with variable income or solo proprietors, like you guys do just have more on your plate than an average employee. You have more decisions to make. That comes with a lot more freedom, which is great, but you still have more decisions than other people when it comes to building your benefits or how to structure your finances. So having a partner in crime can be really helpful to just avoid some mistakes and manage it all very appropriately. And if you have student loans, that is our jam. We love helping people with student loans. We can help you save potentially thousands with student loan payments because we really understand the inner workings of like the student loan world, all the changes that are going on right now, right? I think we're pelted with changes all the time, Mary.
Hmm. Absolutely.
So, and then just like the Google analysis paralysis, like this was a great analogy, Mary. You said, I'll let you say it. It was a good,
Yeah, I don't
good.
know. I don't know if any of you go to a cheesecake factory. That menu is, I can't stand it. I'm like, how do they have this much food in the kitchen? This variety. I don't know
Right?
what to pick. And this is
How do they
something
keep
we
it
hear.
fresh?
I know, and this is something we hear all the time with people that are like, I went on Google, which we love Google, but it's like they're saying, "Hey, I want to save into a Roth IRA," and we're like, you can't just open up a Roth, you make too much, and vice versa. And
Mhm.
sometimes just what might be right for one person is not right for the other. So that's where like just searching for general advice might be a bit rough for you, and it's more about getting a custom plan to know what is
Mhm.
relevant to your situation.
Yeah. There's no such thing as a cookie cutter plan, unfortunately. Fortunately, but unfortunately, right? Because fortunately, that means that there's a lot of opportunity. So SLP Wealth, we both started out with student loan planners consultants. We did student loan planning. As a team last year, we were talking and joking, like, why aren't we doing, we all had our own individual financial planning practices. And we joked and said, why aren't we doing this together? Like, why aren't we providing this to the student loan planner folks that we're working with already? And that was naturally the next question that people would have. Like, we'd get our game plan together for student loans. A client would feel great about it. They know what their next steps are. And then the question was, well, what's next, right? Like what else should I be focusing on? How else can I start reaching my goals now that we've got this like elephant out of the room? So that's where SLP Wealth was born. We created SLP Wealth to be the next step after kind of tackling that big bear of student loans. If you have them, if you don't, great. You are in a great position. So we're really passionate about helping you avoid big money mistakes, really just getting to your goals as fast as we can. Your goals are our goals. And we're a team of CFPs, CFAs, so like alphabet soup here, but basically we are fiduciaries in the financial planning space. We are very educated in the student loan planning space as well. So really just, this is our bread and butter overall. We also have a tax team. So for you thinking like, man, I've got, this variable income. I'm thinking about an S-Corp structure. I think I need to do quarterly taxes. We have a tax team as well. So you could do financial planning with us and hire our tax team to do the tax side of things and tax planning. And this is self-proclaimed, but I do think we're the best financial planning deal you're going to find because we are $99 a month after a student loan consultation. Definitely price check or shop around, and I think what's also super advantageous is we've got someone like Mary who's very experienced with like variable income gig workers, artists that you can specifically work with. We have a niche practice where a lot of our professionals on the team, they're working with specific professions. So we have a dental specific team. We have a vet specific team ran by a veterinarian, turned financial practitioner. So, pretty cool if that's something that you're looking at or needing a partner in. Here's the booking link if you'd like to get started. If you have not done a student loan consultation with us before at Student Loan Planner and you have some pretty substantial student loan debt, that's where you're going to need to start because that's really like the starting place for a lot of the financial planning decisions we're going to need to make too. But this link will take you to the right place. If you've already done a student loan consult with us, then you can just get started with the planning, the $99 a month. And yeah, thank you, Mary, for putting in your onboarding link. That's super, super great. So if you wanted to specifically work with Mary, someone who's like in that world with you guys, the variable income world, she would be a great person to have on your team overall. But anything you'd like to mention, Mary, or anything I didn't touch on before we close out?
Oh, and one thing you don't need to have student loans to work with us. If any of you have,
Yeah.
paid off your loans, props to you. That's amazing. And or if you never even had student loans, we're branching out a bit, but that's really where we started. And for a lot of people that have such large balances, it's it hangs over them. So that's really the first place we like to start with people.
Hmm. Yep. Yeah, and I was just scanning some of the chat just if there were any remaining questions. So, someone was asking like boyfriend wants to start selling his art. He also does handyman work? Should he set up an LLC for each or just one? Generally, you'd probably want to set up two because they're totally different business offerings. If they were similar, like if he was doing handyman work and he wanted to add on, trying to think of another example, like lawn care, like, I don't know, that could be seen as kind of the same business type, but if it's totally different, you'd probably want to set up two LLCs.
Also, your boyfriend is very talented, that he's an
Yeah,
artist and a handyman. That's awesome.
for real, man. Well, thank you guys for hanging out with us this morning. And I will send out the recording later this afternoon. I think, we had a lot of good conversation. Hopefully, you were able to take a few nuggets with you. And if you need a partner in your corner on the financial planning side of things, definitely reach out and we can get you right. But I hope everybody has a lovely rest of your day, and we'll see you on the next webinar in the future.